Good morning, everyone. I am Gina Sudan, the president of the Wyoming County Chamber of Commerce, and I'm joined this morning with Kevin Hallock. He is the partner with Hallock Shannon, and he's going to talk to us about employee retention tax credit. As you may know, the Consolidated Appropriations Act of 2021 changed the rules that PPP can be taken with the employee retention tax credit. So I felt it was really important to talk to our members about those two things. We've had several webinars available to you for PPP, and if you need me to send those to you, I can do that. But really, I haven't seen a whole lot explaining the employee retention tax credit. So I called Kevin with a few of my own questions the other day, and he seemed very knowledgeable, and I thought, you know what, we should probably share this information with our members. So I'm happy to have you on the call today, and we will record this if you want to share it with others. So Kevin, good morning.
Good morning, everybody.
And thank you again for joining us.
Oh, it's a pleasure to be here.
So we're going to dig right in to this employee retention tax credit. And as I said, last year in 2020, you could not take both a PPP loan and the tax credit, correct? Okay. Great. So let's talk a little bit about the time period now that the employee retention tax credit is available.
So essentially, the retention credit is available from, I believe it's March 15th or March 12th, when COVID really began to become the pandemic that it is today. And it carries right through July 1st of 2021. 2020 does have other, the 2020 and 2021 are different in terms of the requirements that are needed to be met. And 2021 is much more beneficial and much more generous than 2020 is.
Yes, so let's dig into that a little bit.
All right.
Let's talk about the percentage of wages, right? Because that increased quite a bit in this new legislation.
It did. For 2020, percentage of wage is 50% up to $10,000, which means that each employer can get $5,000 for the year for each employee that qualifies. For 2021, that amount has been increased to $7,000, so it's 70% of up to $10,000. And that's a per quarter limit rather than a per year limit.
Okay. So then that would be 7,000 per qualified employee.
7,000 per quarter, 14,000 for the 6-month period, versus 2020, which is 5,000 for the year. Great.
And is the 2020 amount, was that, let's see, I believe that the 7,000 now goes back to, right? Or is that just?
It does not. It's effective January 1st.
Okay. Okay. So January 1st of 2020 is the 7,000.
2021, yes.
2021. I'm sorry. Yes. Okay. Good. Let's talk about restrictions on employer size, because this was a big change as well. So the restrictions on the employer size in 2020 was companies with more than 100 employees could take the credit if the employees were working, right?
Correct.
And then if it was under 100 employees, they were eligible for the credit, even if the employee was working. And then not over 100. I'm sorry, I said that backwards a little bit. My apologies.
Essentially, they start considering the 100 employee limit above the small business limit.
Right. So they increased that to 500.
Correct, which seems to be the SBA definition of a small business.
Yes, which I always think is a very big, right? Especially for our area, 500 employees. So just to clarify that, because I said it a little weird, an employer with 500 or fewer employees will be eligible for the credit, even if the employees are working. So there was some restriction on whether or not the employees were working.
That is correct. the essentially the retention credit is set up to kind of help people stay off of unemployment. It's if you're paying your people when businesses close or restricted or revenue is down, keeping them off of unemployment, and the employer is still paying them. Prior, anybody under 100 was considered the small business size, and then 500 in the new act is now the small business size, and it's retroactive back to the beginning. You still have to meet the requirements in order to take the retention credit, which is either a full or partial shutdown, or for 2020, a 50% reduction in revenue in a quarter. 2021 eased that up a little bit. The full or partial shutdown still qualifies. So essentially, restaurants have qualified from the beginning. Restaurants, movie theaters, any entertainment venues. But as far as revenue, it's a 20% drop instead of a 50% drop. Most businesses would not be able to sustain their employees with a 50% drop.
Right. So and that talks about the gross receipts, right? That's on your gross receipt revenue.
Correct.
Okay. Very good. Let's talk a little bit about the interplay with the PPP loan, because now we can do both of these things. And I just want to make sure that companies understand that they can't claim the same monies for the same time period, right?
Correct. Prior to the December 27th law being passed, if you got PPP money, you cannot claim the retention credit. December 27th, that law reversed that, saying that you can claim the retention credit even if you receive PPP funds, but you cannot overlap those funds, which essentially means any wages you pay with PPP funds, you cannot claim as a retention credit. We have gone a little, as a firm, we have gone a little bit further than that, advising our clients to not use any wages for the retention credit during the PPP covered period, not just until the money runs out. We just wanted to build a safe harbor in there for our clients. Obviously, it's the client's choice to decide, but we do recommend not using the covered period wages.
And that covered period you're talking about, that is when you first apply for your PPP. You need to tell them.
It's when the PPP gets funded. So if it was before June 5th, if the PPP was before June 5th of 2020, it's from when the PPP gets funded until 8 weeks after or 24 weeks after. It's the employer's choice. If it was funded after June 5th, it's a 24-week period.
Okay.
And that was the first round of PPP. The second round of PPP money is, regardless of whether it's a first draw or second draw, the employer gets to choose any length of period between 8 and 24 weeks for the covered period.
Okay. Good.
There's a lot of moving parts there.
There definitely are. And I think, a lot of things changed with this Consolidated Appropriations Act. And again, I always, as we started last spring, we always advise you to talk to your own accountant, right? Kevin is giving general advice right now and talking just about what is happening with the changes. He's not giving specific advice to any one business. You still need to talk directly to your own accountant and figure out what's best for you.
Everybody's needs are different, and your accountant should know what your business is doing and what it needs.
Sure. Let's talk a little bit about advanced payments. Are you familiar with that piece of the retention credit?
I am. So essentially, employers, say somebody incurs some, they know that they're going to have some retention credit coming up in the first quarter of 2021, and they don't want to wait for that money. They can file a Form 7200, which essentially they're requesting the IRS give them advanced credit, which then reduces the amount of tax that they would be paying in with their 941 payments rather than waiting to get that refund back when they file their 941.
And then hazard pay has been something that is difficult for employees to figure out where that fits in, right? A lot of employers have paid hazard pay during 2020 to keep their staff on, but there were some limitations on whether or not hazard pay could be included.
Correct. And the new law reversed that in that they are allowed to use the increased pay for the COVID hazard pay to claim the credits.
Right. Good. So that should help some of our employers who were definitely, trying to help out their employees during this time, and then kind of got nicked a little bit for that because they had no way to reclaim those expenses. So that's
Yes,
good.
absolutely.
And then they also expanded who is eligible. So it used to be that governmental entities were not eligible for the employee retention tax credit. And
Correct.
it reversed that some of them now are. So can you go over with us which entities are able to get that retention credit now?
So I believe that they included 50C6 entities, as well as some state agencies and local governments.
Right. And then public colleges and universities as well.
Correct.
So just my quick sheet here has some organizations whose principal purpose is providing medical or hospital care, and then certain federal instrumentalities such as credit unions. So again, if you're a government related entity, I would talk to your accountant and make sure that you qualify before you try to process any of this payroll with the tax credit. Well, the definition of gross receipts was a little more defined this time as well. So they didn't provide a definition the first time. And that kind of left people a little unsure, right, about what we should include and what we shouldn't.
Right. So essentially for gross receipts this time, it's pretty much any money coming into the business. It's not even necessarily taxable income or taxable revenue. It's anything coming into the business. So for anybody who's looking to claim the credit in 2021 and they get a PPP loan, that forgiveness of the PPP would probably be considered a gross receipt.
So you need to make sure that if you're going to claim this, that you're looking at a quarter maybe that you didn't use. Now that's total gross receipts though, right? So that would be the whole year.
Right. So it's total gross receipts for the whole year. Well, it's actually, since everything's by quarter, it'd be gross receipts for that quarter versus the quarter prior. And they are allowing the first two quarters in 2021 to be compared to 2019 rather than 2020.
Okay, good. All right. There were a couple other things that we wanted to talk about, but I do want to open this up for some questions. So if you have questions for Kevin, type them into the chat and we'll get to those. I had a couple other questions that I wanted to make sure we clarified, and those were regarding if you already filed your, I'm sorry, I'm just pulling these questions up over here. If you already filed all your quarterly reports for your employer taxes, can you modify them now to claim the credits for 2020?
Yes, you can go back and modify, you can go back and amend your 941s by preparing a 941X, which is the amendment, and claim the credits there.
Okay. And then what should a business consider when deciding to claim the credit in addition to or instead of a PPP?
So I guess a business should be considering what its needs are and its qualifications for each program. The PPP is without a doubt the more beneficial program that's out there. They are, if it's a second draw, obviously you have to meet a 25% reduction in revenue from one quarter in 2020 to the same quarter in 2019. If you don't meet that criteria, there may not even be a chance that you're meeting the retention credit criteria of 20%, unless your business has been fully or partially shut down due to government regulations. So that's some of the main things to consider. Then obviously business needs are the other consideration.
Sure. And again, we would recommend that you speak directly to your accountant. We do have some questions coming in. And the first one is, by total gross receipts, does that include contributions or just earned income?
It includes contributions, grants. It's pretty much any cash that's coming into the business.
And I do have a little bit of a full list here, so I'll quickly read that. Gross receipts include contributions, gifts, grants, dues or assessments, sales or receipts from unrelated business activity, sale of assets, and investment income, interest, dividends, rents, and royalties. So that was a question that came up on another call that we had is what about, interest income or investment income? Is that included? And the answer is yes. How do we track these tax credits in QuickBooks to ensure proper record keeping?
All right, so inside of QuickBooks is a little bit hard, especially if you're preparing your 941s from QuickBooks. We actually use QuickBooks for all of our payroll clients here, and anybody who's claiming this credits, we've done manually rather than had QuickBooks produce the forms. Essentially, we have just tracked it by calling it COVID pay or COVID retention. And then inside of QuickBooks, if you wanted them to do all the work, you would have to set up an additional payroll item as an addition, as well as a tax credit item, in order for that to flow through to the 941. Because a lot of our clients, at least, don't let us know until we're preparing the quarterlies that they had this type of payroll. We can't go back and fix that in time. If the employer is running their own payroll, they can set these up, and it's a little bit easier when you set these new items up and run it in real time. QuickBooks does have on the Intuit community, they do have the instructions on how to do this, so that way you can track it properly inside of QuickBooks. We have just been, like I said, doing it manually, and then our clients will just pick up the credit when the refund comes in and pick that up as additional income.
Yes, and it's for QuickBooks, the going back, right, and trying to modify that now, if you realize, oh, I should have claimed, right, in the second or third quarter of 2020, I should have claimed that credit. That's a little more difficult, like you said.
It is a little bit more difficult, and even if the payment has already been made, and we're looking at filing for the fourth quarter, it's hard to go back and change a payroll that's already been run and have it come out exactly the same way that it had the first time. So we don't recommend it, but it can be done. And then the 941Xs, if you're going back to a quarter, we would absolutely recommend those to be done manually or through a separate filing system, because QuickBooks is a very good accounting system, and a lot of businesses use it, but it's absolutely not perfect, and it's not the most advanced system.
Yeah, I've definitely been, kind of trying to dig into this, and it's a little hard to figure out how to do it in QuickBooks on your own. So I'll be calling about that. We do have another question about whether or not this information has been updated on the IRS website. And
I don't know if it's been updated on the IRS website, but it has been updated on the SBA website.
Okay. And I will, when we post this webinar later, I will also post a link to a very good article that I sent to Kevin last night. He said, oh, that's one I actually used as well. So we'll share the link to that article that helped us to kind of understand all these changes. I do want to talk, Kevin, about the Family First Corona Cares Act. If you could give us maybe an overview of what that is, because
Sure.
I
So
think that,
essentially that was passed with the very first coronavirus law that they passed back in March or April. And it required employers to pay time off up to 2 weeks for anybody who was either had COVID or was quarantining for COVID or anything like that. And then it also required employers to pay 2/3 of the pay of the employee's pay rate for up to 10 weeks if they were caring for a child because of lack of daycare or something like that, with all the daycares closing. Um, that is a credit that's also taken on the 941. That is not a percentage of the wage like the retention credit is. That is dollar for dollar. Whatever you paid out, you get back as a credit. And you get the gross wages plus the employer share of Medicare and Social Security back on that. That is another item that inside of QuickBooks does not track very well, and we recommend doing manually. And there's actually a worksheet. It's called Worksheet 1 for the 941 that they came out with, that walks you through that credit very, very well, both that and the retention credit very well.
I think if you knew, for us, if I noticed that if we knew about the Family First Corona Care Act, if an employee fell under that, if we knew about it up front, QuickBooks could track it for us. But if we didn't know about it up front, it was a little more difficult to get QuickBooks to track it.
Yes, going back in time made it difficult. If you knew about it ahead of time when you're processing, that made it that much easier.
Kevin, how much sick time does an employer have to pay under that act?
So I believe it's voluntarily able to pay whenever they're out, but mandatory was 2 weeks during 2020. And it did carry over to the first quarter of 2021, but now it is completely voluntary. It is no longer mandatory.
Okay. So, but only in the first quarter.
Only in the first quarter of 2021. The last 3 quarters of 2020, it was mandatory for up to 2 weeks.
For up to 2 weeks. Okay. And then, so what if you had an employee that quarantined, you didn't know about this, and now you want to go back and claim that? Can we do that? Is there a modified form?
So the employee would have had to been paid during their time off.
Right. Okay.
So I would hope everybody knew if their employee was at work.
Right. I just mean if we didn't know that the tax credit applied to that person.
Oh yeah,
They were
I'm
out
sorry.
sick, they were quarantining. That's okay.
Yes, absolutely. Same thing. 941X. You're able to go back and claim that credit.
Okay. Perfect. No,
and like I said, definitely if you're going to claim that, use Worksheet 1 for the 941, and that walks you through, because it is more than just the gross wage amount. It is the employer's share of Social Security and Medicare as well.
Great. And then we have another question here. Do you know if the Family First credit applies to governmental agencies?
I do not know if it applies or not.
Okay. I will find out, and we'll post that when we post this webinar later today. Because I don't know the answer to that question, but I certainly can reach out to my resources and find that out. Kevin, any other tips or things that you have come across, questions from your clients that maybe you frequently asked that you think would be helpful to share with our members today?
No, I think we covered most everything that everybody's concerned about. Obviously, everybody's more concerned about the additional PPP openings than they are the payroll credits. I think that there's a lot of small businesses out there that don't realize that these payroll credits are available to them, and maybe didn't take advantage of them. We as a company, we sent out an email to all of our payroll clients at the end of the quarter to ask them, hey, did you have anybody? And there were quite a few people out there that did pay people for the Family Cares Act COVID time off, and they didn't realize that they were supposed to tell us to get this credit back.
So that's definitely important to, again, talk to your accountant to make sure if you paid people for sick time in 2020, you are eligible for this credit. And you need to make sure your accountant knows that when filing your 940s. Any other questions from the audience? If you'd like to ask directly to Kevin, you can certainly unmute yourself. You have the ability to do that, and you can ask or type it in the chat. We are monitoring both of those things. Just want to do a quick last call for questions. Kevin, I truly appreciate your time today. It's been very helpful, I think, to kind of hear again a synopsis of everything that's happening, and all these changes have been coming at us very quickly. So I know it's hard to keep up sometimes.
It is, and it was a pleasure. I mean, we're a small business in the same community as everyone else on this call. And if anybody has any questions, they're welcome to reach out to me directly too. My email is khallock@hallockshannon.com. Obviously, I don't know the ins and outs of everybody's business, but I can give them more generalities, or check with your accountant.
Great, and I will include Kevin's information again when we post this webinar later today. I appreciate everyone's help and your questions that came in. I think they were all great and things that I didn't think to ask Kevin, so I appreciate that. And thank you all so much for joining us. Stay tuned because I'm sure there'll be more webinars coming out about this. I do want to quickly mention a webinar we have coming up next week with Grow PA. The Wyoming County Chamber, along with the Wyoming Valley Chamber and the Scranton Chamber, will be hosting Grow PA, which is a Philadelphia Chamber initiative, and we'll be talking about the future of work and higher education as it ties into the future workplace. So please join us for that call and watch your email for the registration link for that. Thank you all so much for joining us today, and have a great day, everyone. Thank you,
everyone.
Kevin.